Hello guys, welcome back to my channel. Don't forget to like, share, comment, and subscribe. Investing.com, the Bank of Japan intervenes to prop up the yen for the first time in 24 years. Rate hikes from the Philippines to switch and probably the UK follow another 75 basis point increase for the Federal Reserve. But US stocks are set to open flat after Wednesday will rise. Insurance and Costco report earnings and a wave of protest and immigration hit Russia as Vladimir failures to fill his deployed ranks in Ukraine. Here's what you need to know in final day 2020 September. The Federal Reserve latest interest rate hike target the first direct intervention in foreign exchange markets by the Bank of Japan since 1000, briefly dragging the yen of 24-year low against an unstoppable dollar. The drop of the currency, despite leaving its own policy settings unchanged at its meeting overnight, Governor Haruki Kuroda repeated that he expected to come down of its own according next year due to the underlying weakness in Japan domestic demand. The dollar has surged above 1 yen prior the Bosch intervention after the Fed ended. The interest rate differential between the two central banks policy rate with another basis point hike on Wednesday finally matched the Fed's step for the steep was Swiss, sending the Swiss franc more than one higher against the dollar. They also introduced altering the game and how it remains safe by reserve ensuring banks to whittle down their own excess liquidity, and this helped to tighten financial conditions. The Central Bank of Norway, Indonesia, and the Philippines all opted for slightly smaller step or basis point. Norges Bank exercising the budge in predicting in relatively quick decline inflation next year. That leaves the question from the Bank of England and the Central Bank of Turkey still outstanding. The BOE expected to raise its key rate by 4 basis points, with market also entertain hawks to see if will press ahead with plans to start yielding bond bonds portfolio. Just a new government faced a big jump in borrowing to fund. US stock markets are set to open flat after the dollar cost rate that followed that Fed's decision on Wednesday. Will the basis point equals the middle, the two outcomes seen as possible from the meeting. The dot plot of policymakers kept expression forex indicate that the central bank is not done tightening yet, not by a long shot. Weekly jobs claims and US current account data for the second quarter are due 8 but are unlikely to are zero. Powell hawkish guidance is still ringing in the market hours. Over 1,000 people were arrested over tax across Russia to protest the mobilization of reservists to fight in Ukraine. Social media footage and flight booking stage indicate that men of fighting exodus to flee the country in droves, creating lines sketching by dozens of miles at Russia border with Finland, Georgia, and even Mongolia. The written decree ordering mobilization made no reference to expression and qualification that President Vladimir Putin had made in his address to the nation, suggesting that authorities will aim to raise much more than the 3,000 increase annual in Ukraine. Russia fired as Salvo on infrastructure in the city of Zaporizhia, like a referendum on joining the Russian Federation at the weekend. Oil stabilization after dollar rate fall, crude oil price stabilization overnight after following other risk assets down in the wake of the Fed's decision in making the dollar more expensive. The Fed also made oil and any other commodity price in dollars more expensive for the rest of the world, something that is increasingly weighing on analysis forecast for the May. Futures with Almades having bounced from support level overnight, bounced from support level without making a new low for the week. Prices had also come under pressure on Wednesday from the US government reporting the biggest weekly build in July, suggesting that final demand from the US economy is weakening a little faster than expected. Maybe that's all from me. Thanks for watching. Don't forget to like, share, comment, and subscribe.